you have been instrumental in helping me and therefore our audience sort of understand exactly where we are. Can you give us kind of the lay of the land? Because these are some gigantic numbers. Where exactly the supply, demand, and storage situation for gas stands for Europe heading into next year?
Yeah, sure. No, thanks for having me on. So I guess the first point to mention is that storage in Europe is basically full, and that's been the key priority for most of this year, post the invasion. One of the key challenges here is, can you fill storage when you lose 160 BCM of Russian gas? And we lost about half of that this year. Most of that's been made up for with LNG. You've also seen some demand destruction come through across the industrial side and also on the residential side. As we're looking into 2023, one of the challenges next year that wasn't present this year is that Russian gas is basically at minimal levels. So it'll be even harder to fill storage in 2023 than it was in 2022.
Yeah, and that's such the key part of the story, is it not, Biraj? Which is that, what is it, maybe half or a little more than half of the current storage levels, which are nearly full, which is great, they came from mostly pipelined Russian gas, with the exception of a small pipeline. What is it? In the southern part of Europe, almost all of that is cut off. The IEA says that there's probably a 30 BCM, billion cubic meter gap. I'm sure we could get to a bigger number than that. Do you have an idea of where you stand on that figure?
Yeah, so this year you've got about 70 BCM of Russian gas coming to Europe, mostly in the first half of the year. If you take the current run rates, you're more like something like 10 or 15 BCM for 2023. So it's a much larger gap, close to 50 BCM. And that will have to be offset with even lower demand or more LNG or a combination of other things.
Yeah, demand destruction. And to put this into perspective for our audience, and we tried to get and again, no absolutes because there are different size ships, but we're talking about 1 BCM would be, according to Cheniere and Venture Global and Tellurian, they all kind of confirmed that it would take 10 of those ships, 10 to 12, to get to about 1 BCM. So with a gap barrage of 30, if the IEA is right, that's 300 to 360. If you're at a gap of 70, that's 700 to 800 more of these LNG ships. They don't exist. The import capacity for that level doesn't exist. Where does Europe get the gas?
So again, in addition to filling the storage this year, one of the key priorities has been to increase the capabilities of importing more gas. So you're seeing more regas terminals being built, more permitting and so on. And Netherlands is a good example. You had one startup recently. And you're seeing more of that elsewhere in Europe. The other thing we should highlight is one of the reasons the gas market is so tight this year is French nuclear has been quite disappointing. And you could assume some kind of reversion next year in a more positive case. And hydro has also been disappointing this year. So there's been a number of pressures on the gas market, all combined to create the situation we're in.
I got to imagine covering energy, global majors, particularly in Europe right now, Biraj, has got to be one heck of a job. We'll leave it with this. Can you give us some ideas, some companies that you have buy ratings on that you like, given everything that you know and everything you've talked about and written about? Are there companies that are going to prosper either through renewables, nat gas, or some combination of the above?
Yeah, I mean, as a sector, the integrated energy majors are definitely going to be present through the transition. Our top pick in the sector is Shell, number one LNG player globally. Trading this year has been a bit hit and miss. I think volatility is beyond what has been helpful. But actually, as you're looking more structurally, you end up with higher prices and more volatility, and they should be able to benefit over the medium term from that trend.